Welcome back to another Layer1Live. We got Mike drinking some drinks over there. We've got Dimitri dressed up real nice in his scarf. It is a happy Monday to everyone. It's a good day to be alive. What's going on, fellas?
Nothing much. We had a little Google Sheets incident, some Wi-Fi issues before this, so we're happy to happy to be on air. Happy to be talking to you guys.
Yeah, right before we went live, guys, we got like locked out of that Google Drive, and we were someone was smashing the red button trying to get a hold of Google support, but we were able to get back in. So yeah, we're here, man. We got a full episode. Mike hit some breaking news apparently before we start with the rest. But
yeah, definitely. We always kind of sort through all the major layer one protocols and all the news over the previous week. But in looking at CoinDesk this morning, there is some breaking news as well. So starting off Monday with a bang here. We talked about this previously, maybe many moons ago, about some of the issues that Tron was having with management, especially around the BitTorrent acquisition that they had. But essentially their CTO left, when was that? A few months ago?
I think so.
So their CTO had left, and then things kind of quieted down. But as of this morning, according to CoinDesk, former employees are now suing Justin Sun and the Tron Foundation, alleging workplace hostilities, essentially saying that, kind of broadly that because Justin Sun was not happy with the speed at which BitTorrent was being released, he took it out on these employees and fired them. It's kind of a wild article. I'm trying to kind of piece together all of what CoinDesk is getting at here, but he's the person that wrote the article is also saying that just kind of the general management culture is a bit wild with Tron, and on some occasions, that one of the persons in the lawsuit is claiming that Justin Sun actually slapped the head of engineering for Tron, and that the head of engineering appeared to have also physically hit another manager, after allegedly verbally attacking this person. So there's just some, classic wild stuff happening with Tron at the moment, it seems.
Yeah, and looks like the Tron response, was basically nothing. They basically said, well, we need to go through this, court hearing and all that stuff, and then more details will be said. Basically, they don't want to comment on it.
yeah, it looks like the Chinese office schedule, and this probably is like culturally wide, but it obviously takes part in the Tron offices, but at 9 a.m. to 9 p.m., 6 days a week. So you can see how some of those situations might bubble over if you're in fact working that much during the week. I don't know what that equals out to. What is it, 9 to 9? What does that even equal out to per week?
12 times 6, 72 hours. Yeah,
something like 72
That's pretty
hours.
brutal.
Yeah, definitely. But that just came across our desk as we were going live. So, Tron had that interesting. We didn't mention this right off the bat, so I don't want to jump into anything too emotional. But Kobe Bryant did pass yesterday, so we give our thoughts and prayers to his family, and
absolutely. I mean, he was obviously, for those of you based in the U.S., but even internationally, he's a major figure, and it was pretty heartbreaking to see there. So
he's huge in Asia.
Yeah.
So
yeah, he was big in China. Really an advocate for the WNBA too, which is a hit to them. So It's tough. But we'll move on here. We've got what did you put in breaking here?
Yeah. So final piece of breaking news here. The World Economic Forum has announced essentially a goal for crypto governance, specifically around what they're calling cryptocurrencies and stablecoins. So, I don't really know how to take this, because basically international organization kind of coming together to say, hey, we're going to now govern all of these decentralized protocols and privately issued stablecoins is kind of goofy to me. But the important piece, I guess, for people like us is that it's just another example of, I think, larger international organizations recognizing that, hey, this is a real thing, and it's not going to go away. And, whether it's cross-border trade or restrictions on, money leaving the country, or terrorist financing, or, small business financing, whatever it is, right? There's kind of this emerging tokenized or cryptocurrency based economic system that continues to grow, and more people are now seeing that, like I said, this is not going away. This is going to continue to grow.
Yeah, the Fed came out also saying that basically they're huge concern in terms of stable coins liquidity, and the risk there is should it hit any type of economic downturn, if there's going to be some kind of a crypto like big black swan event. So they were trying to talk about what's the regulatory entity behind it to make sure that they have enough liquidity to pay on the stable coins that people own. So I think they're taking it thank you, very serious. So that's why they want to talk about it in the World Economic Forum.
Yeah, did you guys see any of the information from Davos this weekend? I know like the World Economic Forum is loosely associated with some of the people that attended Davos. Did you guys see any news on that?
A little bit. As we kind of move through quick news next, there's an interesting point that we'll talk about, how Switzerland is really moving ahead as of Q4 of 2019 and Q1 of 2020 with some things. I saw that, as we'll discuss with Dima, Ripple is saying that they'll possibly have an IPO on a traditional stock exchange, within the next 12 months. Yeah. So okay. How about you? Did you see anything else?
No, I didn't see. I definitely saw like some of the like more notable Twitter profiles in Davos. I think, God, I couldn't name any right off the top of my head, but I definitely saw a good amount about it, but didn't look into it. So
I saw a pretty funny tweet that was somebody basically saying they would like to short any startup who doesn't have a working product that attended Davos.
All right, so I got the quick news. We'll breeze through these. We took a little bit longer than we would have liked last time, so we'll breeze through this. But I have the first kind of little quick news segment. It's Paxos launching automatic conversions between bank deposits and this stablecoin. So we already talked last week about how Binance was working through Paxos to launch their BUSD on their platform and make conversions one-to-one with like other stablecoins. This specific announcement is just taking this partnership one step further. It says the feature allows customers to automatically wire transfer funds from their bank account into either Paxos or BUSD, and then obviously like vice versa. So somebody can liquidate BUSD or Paxos and receive funds into their bank account via wire that way. So that's quick news, but good to see continuous like on and off ramp infrastructure being built.
Yeah, for sure, no doubt.
Yeah, so I guess I got another one. ConsenSys, I did read about this earlier and added it to the doc here, but ConsenSys is working in the supply chain field here, and I guess they got tabbed as an Ethereum-focused firm to work with some big agribusiness giants to put infrastructure as far as supply chain goes with agriculture. So that has a lot to do with blockchain being able to make a lot of these supply chain things more efficient. But that's pretty much it.
Yeah, for sure. Very cool there. Good to see ConsenSys heading in the right direction. Some news on Tezos that we saw this weekend and end of last week. So per usual, the Tezos Foundation is back to issuing new grants for projects on their platform. They've been one of the best at doing this in 2019 and obviously are continuing to do so in 2020. So 21 new grants have gone out for projects building on the Tezos blockchain. They include DeFi, smart contract development, education, much more. You can take a look at all of the grants that have gone out after the episode once that link hits the YouTube description. And then finally, there is a new silicon-based venture fund that is going to use the Tezos blockchain to essentially create a security token called Silicon Valley Coin. It's from Andra Capital, who is one of those who's going out and trying to put together a large kind of founders fund type fund, and are thinking that one of the interesting ways to maybe link crypto in that is to basically tokenize exposure to their fund. So I don't know why you would go with the name Silicon Valley Coin, maybe for the headlines on Yahoo Finance, but yeah, at the end of the day, probably good for Tezos as they really continue to not only do good things, I would say, for the blockchain and the ecosystem itself with grants, but they also obviously continue to expand on the institutional front as well.
Nice.
Yeah, me and Dima had the same reaction there. I think they could have gone a separate way with that branding strategy. So, but whatever.
Moving right along. So we got Tether. I don't know why I always get Tether. But anyway, so Tether is basically launching gold-backed stable token. And they're going to launch it on Ethereum and Tron network. So now you can buy 1 troy ounce of gold through Tether, basically. And the way they're saying it is that you can actually link it back. You'll get a specific identification number that links it to a specific gold bar in a vault that's located in a Swiss bank. That sounds cool, but you also have to understand that there's no insurance there. So in case something happens to the gold, the people that to hold those assets, they're exposed to the risk without insurance. So now that Tether is successfully launched stable coin for USD backed currency, now they're doing it with gold. So we'll see how that's going to continue.
Shady history when it comes to Tether backing reserves, right?
Yeah. Mm-hmm. That was going to be the first thing. What's the need here for a gold backed or I guess a stable coin backed on gold, Dima?
Yeah, I mean, it just gives more nimbleness in the market. Just like having dollar-backed token gives you the ability to, in those environments where it's a risk-off environment where you hop out of the alts, you hop into risk-off assets like gold or currency. That's the idea for it. So
yeah, we've already got digital gold though. What's up? Here we go.
Right. Yeah. I mean, that was going to be my point, right? Is that while I think most in the crypto space would say Bitcoin is the new digital gold, I still don't think we're there quite yet where more of your traditional financial folks are ready to firmly say, hey, this is my new digital gold. It's been moving with gold as of late, right? With a lot of the Iran conflicts and now the coronavirus, but it's going to take some time, I think, for that, for kind of that confirmation of the correlation to happen.
I think Paxos did it.
Paxos.
So it's like, I would rather go with Paxos,
And I'm sure there will be tokenized commodities popping. I'm sure we'll see oil, silver, right? All these various ones. So,
all right. Moving right along. Square secures patent for a new crypto payment network. So basically, news came out. Square, we know that they've been, in crypto for some time already, and they secured a patent for cryptocurrency payment network. But it's like, for me, it's what does that even mean? Like having a patent for cryptocurrency payment network, like, don't we already have crypto payment networks that already exist and doing things? Like, why do you need a patent for it?
Yeah.
So I'm kind of mixed.
Was there anything specific about this patent that made it different?
A little bit. I mean, Dimitri and I had this discussion a little bit via Telegram.
Yeah.
The biggest thing that I pulled from it is that I don't think they're actually trying to necessarily, and I didn't look at the patent, so don't quote me here, but it doesn't seem like they're trying to patent, a cryptocurrency payment network, and they're more trying to patent the process in which they transfer fiat to crypto or crypto to fiat. With the goal, it seems like, of someone being able to, in the same way that Square Cash works now, where you can send someone, fiat dollars, you would be able to send them Bitcoin, but they would receive it as US dollars, right? So, maybe there's something down the road where, if your default setting is based in Bitcoin, if someone sends you fiat, you'll automatically receive it in Bitcoin at that spot price, and vice versa. If your default setting is in USD, if you send me Bitcoin, I'll still receive it in the relevant USD value.
Yeah,
so, that makes sense. Yeah.
Yeah, it does say the crypto arm of Square release some type of Lightning development kit, the LDK, that designed to ease the process of integrating Lightning technology into new business and projects. So overall, I mean, I get where you're coming from, Demo, where it's like, why do we need this when it already exists? But I do like the fact that Jack Dorsey and the obviously Twitter owns Square, that they're actually doing work via Bitcoin. So it's,
absolutely.
Yeah.
I'm definitely a fan.
Why do you hate Square so much?
I don't, man. It's the Ukrainian bear.
He comes out once in a while. But all right, moving on to the discussion portion. This is the good stuff, the meat of the episode, where we kind of lay down a topic and you discuss it for about 10 to 15 minutes. So this is probably my favorite part of the episode. So we'll start with Bitcoin Cash, and specifically one CEO of a top mining firm. His name is Jiang Zhou, CEO of mining pool BTC Top. They proposed a 12.5% tax on the mining rewards from Bitcoin Cash, and this would go to fund development of the actual protocol. So a lot to read in here, and I know Charlie Lee of Litecoin kind of weighed in on the actual process as well, and kind of gave his own understanding and his own solution to a problem that is crypto wide. To be honest, everybody wants money for development of their platform, and money that can fund development could go back into making the token and the network more valuable. So what did you guys think about this 12.5% tax on the rewards that Bitcoin miners or Bitcoin Cash miners would receive over, I believe it's like a 6 to 8 month period? I don't know if it's 6 or 8, but it's over that period.
So there's many things to break this down, but I'm going to start from one angle. All right, talk about specifically about the entity that's going to be formed to hold these funds that are being collected, which is, it's really not clear in terms, they're saying it's going to be transparent and all that stuff and everything, but the entity that's going to hold these funds, how are they going to actually deploy these funds, and like which projects, who's going to be in control of that, right? If you're trying to convince, the network of these block miners, to put in money into this fund that's going to be controlled by the people who propose it, maybe his friend is just running that,
Right.
It's like I feel like you have to be very vigilant in terms of doing due diligence and setting up like an organization that everybody has their own say if they're implementing this tax. If all the miners have the say, or somehow is not controlled by only a small group of miners that propose this tax. So that's kind of my thing about it. Where the
legal headaches around that. I mean, I can't. It's Hong Kong based, right? But you have miners all over the world. It's obviously kind of a quote unquote decentralized network. Like definitely a big point there. There were 2 points that I found kind of interesting that I don't think are necessarily good for Bitcoin Cash. But, just to kind of clarify here, right? Essentially, the way that this would work is via soft fork, where this new soft fork would be implemented. The CEO of the mining pool, BTC Top, has actually gone out and gotten essentially kind of approval or not signatures, but he's gotten a good response from Jihan Wu, Roger Ver, other very large miners of Bitcoin Cash. But if you understand that this gets approved, and based on Charlie Lee's kind of discussion on it, is that he's basically saying they're going to need quite a bit more total hash rate for there not to be just a ton of different Bitcoin Cash forks. Yeah. So if you think we have a lot of Bitcoin forks now, just wait until the fork itself starts to fork off. Now we get Bitcoin Cash ABC, Bitcoin Cash, Jihan Wu's vision. Like it could be a total mess for Bitcoin Cash, which already, does not necessarily have the funds for kind of continued growth. So I think there's issues there. A lot of people are talking about how they kind of just dropped it on the ecosystem. And they're like, hey, we're doing this, no discussion, right? Like this is happening. Sorry, we're going forward with it. Kind of follow us, right? The other piece is that, and again, I'm not a Bitcoin miner, but I wonder how many other miners who even if they do think this is a good idea, how many are willing to give up that 12.5% by mining on Bitcoin Cash versus mining on Bitcoin, right? Or any of the other proof of work networks out there, right? So if I'm now getting a 12.5% discount on this, speculation that this new development fund is going to help push the price of Bitcoin Cash forward, do I lock in that additional 12.5% and just strictly mine on Bitcoin or, other proof of work coins that maybe have a similar hash rate? Or do I take that speculative chance? So there's a lot of questions for sure.
Yeah, and another thing to break down to your point, if you're a miner and you do not agree with this soft fork and you don't go ahead with this, basically the guys who have gotten together, which you talked about, which is, I'm looking in the article, Jihan, Roger, all of these guys that own most of the hash rate on the Bitcoin Cash network, they're basically going to orphan your blocks, meaning that they're going to not pay out rewards for those blocks. So basically they're kind of strong arming the community in a way, and that was obviously a concern. Going into kind of Charlie Lee's solution, he was basically saying that it should be a voluntary fund, right? Like you have an address or 2 or 3 different addresses where miners could voluntarily put 1% of the rewards from, over a certain period of time into this fund, and then you have, a funding for development on the network, and that kind of goes into, bringing value there. But I think we're kind of like talking to each other in making the same points, in that even taking 1% of the rewards from a Bitcoin miner or a Bitcoin Cash miner, there's already very slim margins where they have to, be in the green, be in the black. So that's we'll see. Yeah, I really don't.
For sure. We'll keep you guys posted on that. Obviously, it's definitely it'll be interesting.
Yeah, how do you fund development for like, what's the best way other than bringing in a big time VC or big time firm into the ecosystem? How do you fund development on the platform other than taking these rewards? What do you, off the top of your head, have something?
I mean, you could do a similar structure, but you would just do it at launch, right? You would implement this at launch versus a year or so after the fact, right? I don't remember when was Bitcoin Cash created, 17 I think 17 maybe. So, implement it then, right? Don't do it 2-3 years later when everybody has businesses that are kind of up and running. And to your point, right, like profit margins there are set. I mean, we've been in a deep bear market. I highly doubt a lot of the smaller miners are ready to give up 12.5% as a fee for, kind of this new Hong Kong based development fund, which to Dimitri's point is like, are you guys just gonna collect interest on this? Like what's the plan before you just force this on us, right? Yeah. What are the goals? What actions are you gonna take that's gonna help push Bitcoin Cash forward? So
there's the other side also, is that it essentially pushes on the equal level for the miners to contribute to Bitcoin Cash, kind of growth, instead of just having like a small percentage of miners that are doing it correctly and they're reinvesting in the ecosystem, and the majority of them are cashing out. Then it's not fair for those that are cashing out or not contributing to the Bitcoin Cash growth and are getting momentum to the upside as far as the price action goes for like Bitcoin Cash. So like they're benefiting from Bitcoin Cash going higher because of the small percentage of the miners that are contributing to the ecosystem, which is kind of, if you think about it, like not fair in that way, right? It should be, everybody should be equally like invested in growing it to reap the rewards from Bitcoin Cash going higher. So that's the only thing I can see maybe is like a silver lining. And
that goes back to that 80-20 rule we were talking about, where 20% of the work is done, or 80% of the work is done by 20% of the individuals. But before, Mike, we can move on, but before I do that, I want to get onto the comments. Sheffield's in the chat, Sunil's in the chat. I think Metanix was saying 10-minute block time still a problem for day-to-day commerce. 10 seconds is considered too long for e-commerce point of sale. Obviously Bitcoin Cash is kind of positioning itself as this point of sale in e-commerce type currency. So if you have 10 seconds, I'm not a point of sale expert or anything like that, so I don't know the psychology behind that. But
Yeah, no, it's a good point there. I mean, it just moving into what feels like potentially kind of the revitalization of the bear market here. It's not a, I would say, a bullish thing for Bitcoin Cash. It's just a lot of questions for them. But
Cool.
yeah. Anyway, moving on here on the OG Bitcoin front, looks like this essentially retail interest is continuing to climb. We talked a little bit on a previous episode about how Google search trends can essentially show you whether or not retail is moving back in, or at least interested in moving back in. And according to CoinDesk, this Google search terms around Bitcoin's halving or halvening, however you want to pronounce it, has increased. It's doubled essentially from December to January, and continues to kind of rocket up. While at the same time, according to Yahoo Finance, we're seeing some of that accumulation start in the form of Bitcoin addresses with essentially 2 or less Bitcoin, right? So in the thousands of dollars range, increased pretty dramatically, which generally historically has shown that retail is kind of slowly moving in. So we're seeing some good benefits of this 4-year Bitcoin halving kind of PR push, right, for Bitcoin. And the question that everybody has constantly brought up over the last few months, as people started to turn a little more bullish on Bitcoin, is the halving priced in? Right. So I want to get your guys' thoughts on that. Q, where do you kind of stand? Do you think the halving is priced in, or do you think we see quite a bit more price action around the halving?
I think the general sentiment of Bitcoin is going to push it farther upwards, even if the halving is priced in already. I think that's kind of the narrative that's being built around coming out of this bear market. That's just how I feel. Like the general sentiment in the crypto community is that we've been in this market for a long time, this kind of bear market, even though Bitcoin's bounced off its all-time lows, or at least 2019 low of what, 2K. What was the low?
3K.
Like 3,200.
Yeah, 3,200, like that. So it's obviously bounced a lot higher off of that. But my general feeling is yes, we will continue to see upward trends, even if the Bitcoin halving is sort of priced in. So kind of a half-ass answer there.
A do desk now.
Yeah.
So I agree with what Q said. Because right now the market is so saturated with speculators, and when we have a market condition like that, we usually overshoot a lot, let's say, being priced in or underpriced. So that's for sure. And especially from my view, I think that if the demand for Bitcoin usage for Bitcoin stays the same, the halving is going to definitely help, and the price is going to go higher. And right now, with the way things are going globally, with certain events that we see coming out, I think that's just pushing it even higher. So if the demand for Bitcoin is going to be picking up as well as coming up to halving, then it's going to be very good for Bitcoin. I think it's going to go higher. The other day I was looking at a chart somebody posted on Twitter where it shows where most of the Bitcoin is bought from local Bitcoin, based on countries. And you can just see Venezuela is just dominating that like crazy. And you obviously can see Iran and others on there as well. But you can see just the uptrend in terms of just people, fleeing their country's currency or hedging, because of economic hardship. And that, that's not going to slow down, because we know what's going on geopolitically. Things are not slowing down. If that's continuing to escalate, then, with the halving, that's just going to benefit it.
Yeah, we saw a bit of that over the weekend. It seems like the weekend has kind of turned into this opportunity for traditional financial funds, hedge funds especially, right, who maybe don't have all of the access they would during the week, get exposure into Bitcoin to offset some of the losses of the traditional markets, which as of this morning, we're down almost 1.5%.
Yeah.
So they're getting absolutely crushed on, news of the coronavirus spreading. There's almost, 3,000 cases of that now. And it'll definitely be interesting to see what the total kind of picture looks like as we move into May for the halving, or June, or whatever it is. Because there, to your point, Dean, there is so much happening globally, right? You you have countries like Venezuela or Lebanese banks are, you know, on the brink of default kind of thing now too. So as far as it being priced in, right, I think one thing that people tend to forget is that, you know, full-time crypto folks like ourselves or even part-time ones, right, like maybe some of our listeners are, we kind of get wrapped up in this bubble, right, and think that the only people that are interested in this stuff are the ones who are following it on a daily basis, right, checking the Blockfolio or the Delta apps to see what the price is at. But, you know, I think it's hard to say it's priced in when, in my opinion, a lot of those generally retail investors have not yet arrived. Right. So yeah, maybe within the current community of the current investors, right, it might be priced in because people, you know, hopefully bought at some of those lows, maybe towards the end of the bear market, somewhere between, you know, maybe $4,000 and $8,000. But that new group of retail, right, they're only now starting to kind of see some of that news come out about the Bitcoin halving. As we move into March, April, it's only going to increase.
Well, I was also talking about the fact of for those countries that are struggling, you know, there's no like sophisticated onboarding tool for them to get on Bitcoin. So the liquidity is not available in those distressed countries, which undermines, the retail people that would otherwise would get into Bitcoin and generate more demand. So I think as things continue to progress, once we get the infrastructure there for efficient liquidity and give the ability for those retail investors to hop in at good market prices, you know, that's going to really help a lot Bitcoin.
Yeah. Shout out Binance for the things they're doing. My goodness, they launched Vietnam and Vietnam's fiat currency, Thailand, right? I mean, they're on the bleeding edge of that.
Yeah, capitalism at work. They're doing a lot of good jobs and are being rewarded for it. But it's funny because you brought this up last week, Mike, and that there was an interview that Joe Rogan did with the head of CIA or former head of CIA intelligence.
He wasn't a head. He was some sort of operative. Yeah, okay. Mike Baker.
All right, so very high up in the CIA, and they start to talk on Bitcoin like an hour or two into the episode, and the guy's just like, man, I don't know anything about that. And we're just like, what the hell? Like, yeah. So I think that plays into like what you think there, right? Like if a guy that high up in Central Intelligence Agency feels that way about cryptocurrency, and Joe even said it himself, and Joe's had Antonopoulos on, so he's got the education there, and he still is like, I don't know about it, man. So for those two specifically, I know it's a small sample size, but for those two specifically to not be actively engaged in owning Bitcoin or anything like that is kind of not a trend, but what would you even call that? Kind of a good example there of maybe the population not being ready for it. But
yeah, education still needing to happen, and there was a general fear, right, around the kind of speculative history that Bitcoin has had too. So.
Gotcha. Yeah. Well, we got a couple more comments. One that we'll probably get to later. It's about Sarth. This is the first time that we've heard Sarth Meta in our chat. So Sarth, welcome to Layer1Live, and thank you for the comment. It says, will tax get implemented in 2020 on cryptocurrency? What do you think? So Sarth, depending on where you are, I think we'll talk about this later, but there's already a tax on crypto. I think you should check that out. Barry's hopping in the chat. Taxation is theft and government is a scam, friends. So good to see.
Welcome, Barry.
And Barry also says we need to update our Telos logo on one of our rolling images. Barry, we did the Telos interview when it was still an acorn, so I think we're gonna have to leave it as an acorn. But yeah, let's go ahead.
So moving right along, some news from Ripple. So Ripple's Brad Garlinghouse, right? Yep. That's how I pronounce it. Yeah, basically hints that the firm is thinking to do an IPO in 12 months. And that's something that you were talking about quite a bit. It was very interesting. We had a very good discussion.
I predict these things.
Mike was talking about how basically once these big, crypto companies are going to start doing IPOs, that's going to be a huge push for the market, for the traditional market, as well, as things are kind of so overpriced right now, in traditional markets, that it's hard to find good PE ratios and so on. But if you have Ripple, that's basically, is already working with international payment systems. I think, what is it, MoneyGram, right? That they were, yeah. So they've seen quite a bit of success there already, and overall, they're doing real well with enterprises specifically. But the thing behind it is that the concern is basically what we always talk about. All right, that's cool, but how does that actually pump my bags of XRP? You know, so for the XRP bag holders, you know, it's like the concern is there, and there's really no clear sign like how that's going to affect XRP as the price. That actually brings a little bit of a concern from my side, because I think if they're going to be doing an IPO, then they might have to actually get rid of most, if not all, of their XRP reserves just because of the regulations. And that would be, you know, that would be a disaster.
Yeah.
You know, so
that's a lot on the open market. I mean, it's interesting you bring that up, right? Because alongside that, Masari put out an interesting article outlining essentially Ripple's quarterly XRP sales, right? So, you know, any XRP diehards out there, XRP army, you know, cover your ears. But essentially, since Q4 16, or at least that's as long as Masari's been tracking it, Ripple has been selling their XRP token. Again, important difference there, right? We've gone over that before, to both exchanges and OTC providers, right? So maybe they go and they sell them at a discount, which allows the exchange or the OTC providers to make a little bit of money. But this traditionally has grown pretty steadily, right? In Q1 18, they did about 1.7 billion or excuse me, 168 million in these kind of direct XRP sales. Q2 of 19, they did 252 million. Then it started to really fall off. Q3 19, they did quite a bit less than half. They did 66 million. And then in Q4 of 19, they did 13, right? So in a period of 6 months, they're basically over-the-counter and exchange sales of the XRP token dropped from 252 million down to 13 million. So there's a lot of speculation on why that may have dropped. Are you know, could they be holding tokens and reserves now that the market has peaked up a little bit? Could it be you know, some sort of regulatory concern, like you said, right? Now they're selling this, you know, quasi security / cryptocurrency to, you know, a bunch of shady non-regulated players in the form of global OTC providers or exchanges. So a lot happening behind the scenes with Ripple, it appears.
So do you think they're basically like, hey, we need to slow this down if we're going to go to IPO? Like, if we're going to deal with these regulations, we don't want to right away go from, you know, selling 252 million right away to go into like an open market, like just based on regulators?
I think that could be part of it, but I think, you know, to be honest, more of the reason that it's slowing down is probably because people aren't purchasing it anymore. You know, Ripple was this major payments network within the crypto space, and there were very few people who were kind of against that, saying that, you know, this token isn't really being used and it doesn't represent the Ripple company, right? It's obviously not equity. And as the years have gone on, that narrative has increased, that basically Ripple, the company, is much different than XRP, the token. So I would guess that a lot of the declining in sales has to do with the fact that, you know, nobody's really interested in kind of participating in this scheme anymore. You know, I was listening to a podcast that was talking a lot about how the XRP army, kind of their social media presence has dipped significantly. You know, back in 2017, it was massive. You said anything negative about XRP, your comments were filled with, you know, with hate. But now it's kind of, it's no longer the case. So, yeah.
I think also we can speculate about the fact that the reason why they slow down in sales is because they've probably scaled out a pretty good amount already, which gave them the opportunity to jumpstart, you know, things that they're doing right now. On an enterprise level. So I think that is already starting to generate enough revenue for them where they don't really need to use the war chest that they have. You know, therefore there's, you know, stopping to dump this on an open market.
Yeah.
But also at the same time, I don't know how much they still have in the reserve, right? So if they're already like scaling down to almost, you know, the bottom of the barrel basically, then you know, they're getting ready for that IPO where their hands are going to be clean. Listen, we're not you know, Ripple is not holding any XRP anymore. We have a business that we run with enterprises and so on, all that stuff.
We're clean.
Yeah, exactly. Basically, you know.
Yeah. Plus, you know, now they have essentially since Q4 2016, they have the cumulative XRP sales is 1.22 billion.
Yeah, that's enough.
So that'll get you through IPOs to raise enough money. But the final point on this was the one that I brought up to Deem whenever we were talking about it, was that as I've kind of thought through what could be a catalyst for the next kind of stock market pullback or crash, one thing that I thought through was that as crypto continues to grow, instead of crypto being the alternative for people, right? I wonder if that is actually the catalyst that causes the stock market to crash. You have Coinbase, you have Ripple, you have Kraken, you have, you know, maybe a Binance, right? All of the various mining pools and companies that are selling mining equipment all now rush to IPO to raise funds for, you know, maybe what could be a bear market. You have these massive valuations piling on. I mean, I think Ripple's already valued at $10 billion, right? Pre-IPO, obviously. So you have all these massive valuations piling on in this new kind of crypto blockchain industry, which, as we all know, is still very, very new, right? People are still trying to figure this out. And just as we saw with the .com bubble, it turns into this mania, right? My point was, could crypto actually be the catalyst that causes the stock market to crash versus kind of the alternative and the savior figure that I think a lot of people think crypto could be for the stock market?
It's been that fuse that lights it on fire. Yeah, that's great. Exactly. I remember now that you're talking about. Yeah, that was a very good point.
Gotcha. Well, I'll head on to the next piece of news here. If you guys don't remember, Giancarlo, God, what is it? What is his last name? But it was like Crypto Dad, essentially, when he was the head of the CFTC, if I'm not mistaken. And basically, he was going to bat for crypto. He was really, how could I say this? He was really just going to bat for crypto. Anyways, he's decided to start this digital dollar project, literally what the name of the project is. And he says to study potential avenues to advance U.S. digital dollar tokenization and related implications on the U.S. and global economic and financial system. So basically, he's using this digital dollar project to educate the government in ways that the digital dollar could see USD maintain its relevance, you know, kind of in world economics. And he lays out, obviously, like the value cases for why a digital dollar would make sense. He talks about international payments. He talks about wholesale payments within the country, retail payments, things like that. So there's a lot of key principles in here. I can read off a couple, but let me drop the link here in the actual chat so you guys can follow along. So I got key principles here, but a lot of it has to do around the fact that international payments, you know, can't be conducted in USD currently. They can't be conducted digitally. He says a digital dollar would allow establishing more direct monetary relations and address persistent deficiencies of the existing correspondent banking model. So a lot of, you know, in-depth reporting here by Giancarlo, and I need to get his first name, but basically, you know, another guy going to bat for crypto, at least from this perspective. Let's see.
Yeah, for sure. It's obviously kind of on the back of a handful of other countries, as we've talked about before, issuing their own kind of digital fiat currency. China's obviously been the largest to what seems like continually say, hey, this is coming next month, and then it doesn't come. They've got bigger problems now with the coronavirus on their hands, but overall, I think it's very bullish for crypto and blockchain in general to see all of these fiat currencies now essentially kind of capitulate and say, yes, like we understand that the digitization of this has to happen.
Right. Yeah, it kind of breaks down the borders and like the way the system is designed now, it's so like ancient in terms of transferring funds. It requires a lot of different entities, sign-offs, and like a lot of things that really shouldn't be there anymore. And we can streamline things, through digitizing a certain currency. The problem there is that, basically when you have countries like China and others are moving into digitalizing their currency, is that now they can move away from SWIFT, like a system that's used globally, where it gives the dollar basically being the global reserve currency. So that does put risk on a dollar,
Right.
so therefore they're trying to scramble, figure out how we're going to what's going to be the dollar's answer to all these countries digitizing their currency and going around SWIFT, especially in the time where we have sanctions and all this geopolitical tension between trade and so on. So
it does help that we have kind of the ex-CFTC chair talking about this, and not just some person that's coming directly from the crypto community. I mean, I think that he has a little bit more respect in the eyes of his peers, probably, when it comes to regulation in this sort. But yeah, I mean, I guess the real tough thing about the digitization, wow, I'm struggling with that too, but digitization of the dollars, you lose that anonymity that cash kind of still provides. It's kind of the last safe haven that you have of anonymity when you're transacting between whoever you're transacting with. So
yeah, and hopefully that's kind of the bullish case for crypto, right? Whether it's privacy focused coins or it's Bitcoin post some of the privacy BIPs that they want to implement later this year. Hopefully that's really the big value case that's pushed forward as people become more comfortable with what a digital dollar is. Right? You're always going to have people who want to use cash, but essentially what we're moving to is a cashless society in a lot of ways. We've seen that over the last few years or decades here. So hopefully that's bullish. The other point here that it kind of coincides with this digital dollar is some countries who are really full speed ahead on crypto as a brand new asset class, or at least putting together infrastructure that will allow it to become that. Switzerland is a big one, right? Davos was just in Switzerland, obviously, and they had a big focus, it seems, on a new bank that was opened in November of 2019, the SEBA Bank AG, which is based in Zurich and has, believe it or not, launched connected debit cards. They have crypto custody, crypto trading options through a mobile app that's actually, launched by the bank. So if you assume kind of like a PNC or a Bank of America, just all of a sudden coming out with, a crypto-backed debit card and a trading app on their, on your phone, it's pretty significant. So as, I guess kind of looking forward, right, as we see certain countries that maybe are more tech focused, like a China, or more, focused on an open financial world like Switzerland, we're going to see them push those limits to better themselves, right? To better their country, better the opportunities that their country has on a global economic scale.
Yeah. I'm kind of forever scarred by the Swiss National Bank in general, just Swiss banks, because of what happened in Forex. So I'm always, kind of every time I look at those news, I'm always kind of suspicious about it, just because how the Swiss National Bank carried itself back in the day when they just pretty much, had caused a black swan event in Forex.
One of these days we got to get into that story on
SNB
on a Layer1Live or a Layer1 podcast, because that's a good one that we've heard time and time again from you over an old fashioned and a cigar or something.
Yeah. So the debit card is fantastic because, back in the day, remember I was telling you that we were working on a debit card for Bitcoin as well, but that was like super early. That stuff is definitely fascinating to see as it expands.
Yeah, I think before we move on to IEOs Are Dead, which is a fascinating title, Barry's saying, can I ask you guys a hot take question and get your 3 opinions on some of this related? So I'm not too sure if so you got to hear me right now and ask the question right now, unless we're going to move on to IEOs Are Dead, but we might be able to catch the question midway through, IEOs Are Dead. Dima, if you want to start it off.
Yeah, IEOs Are dead is just, it's a quick news. Basically, there's really not much to discuss. We had Arthur Hayes, who we saw in New York, said that IEOs are going to be way shorter than ICOs, and they're going to last about like 6 months. And he called it.
Yep.
You don't really see any IEOs now that are making headlines or making returns. Specifically, this chart that we're looking at, average return of IEOs versus a number of days since being listed, is now approached zero. So basically, nobody. It seems like the statistics there is that people are not holding IEOs for the long term. They're looking to cash out of it really quick and just make that quick buck, which is like what we've been talking about. Like, when you get in at discount prices and just, when it's the open market, start dumping it, because you already made that money. Why are you going to hold, expose yourself to higher risk? So, IEOs have pretty much dying because of that in popularity, because people are seeing the patterns in terms of like what happens to projects once they're listed, and the price just goes down. And if you take a look at exchanges and the drop from all-time high for these IEOs, they're pretty ridiculous. They're like more than 75%. Might drop this tweet in chat so you guys can take a look at the stats.
The graphs are pretty hilarious. It's basically like over a 200-day time frame. The interest in any specific IEO is basically zero. Which is not good for exchanges that have put a lot of time and effort into IEOs. But yeah, I mean, it's exactly what you said, right? You can't create a system that ends up kind of dumping on all of your investors via early, kind of more private sale venture type techniques and expect it to last for any significant amount of time. And the tweet that you guys will see there is some of the data on returns is kind of misleading, even because the all-time high price, right, is literally as it's listed and as the exchange kind of lists it at $12, and that's what
the opening price was.
Yeah, exactly. It's like, okay, well, the all-time high was the exact opening price, at which point all of the people who got in early have this probably automated, or they know the exact time it's going live, or have some inroad with the exchange where they're going to be able to dump first. So all-time high was $12, and now that it's sitting at 12 cents, it's like, that's not even a real kind of all-time high, in my opinion.
Yeah, and I've got it here on the video for those of you watching on YouTube Live now or after the episode goes live. But for those of you on audio, there is a chart here that lists all the exchanges, the amount of IEOs, the USD return over time, the BTC return, and then it, like what you guys are saying, the all-time high return. And these, all of them are overwhelmingly positive on the all-time high return, and that's what you're talking about, correct?
Right.
Where, like Binance has 658%, but that could be at all-time high when the people that got in before the exchange listing, that's where they're getting out at, correct?
Yep.
Is that what you're talking about? Okay. So I guess the discussion question would be then, did IEOs ever have a purpose, or was it just a flash in the pan? I think ICOs generally, like in theory, still have a purpose. I think like the general like crowdfunding, in starting, investing in projects using crowdfunding principles, I think is like a really cool idea. And I still think it has like a viability long term. But what is the need for an IEO? And then was it just a tool during a time when no one really had any returns? It kind of seemed like the shining light, right? Like we were in the depth of a bear market, and somehow IEOs were like giving returns on, people at least that got in early.
Yeah, and as is often the case with the block, right? I think the title IEOs are dead can be misleading to some degree, because it's over that 200-day timeline, right? Is basically what the guy's saying, is that they die at kind of that 200-day mark. So yeah, I mean, to your point, I think there is a lot of value in that crowdfunding concept. I mean, you have that ability to do it in a regulated way. I think the issue becomes that the crypto industry has just bastardized that so badly via speculation that now it's one of those things where if you bring up a concept of an ICO or an IEO or crowdfunding, people just automatically are like, you know what, I don't even want to touch it, right? I've seen so much loss myself, or so many other people's losses hit hard, that I don't even want to take the chance. So maybe 5-10 years down the road, it pops back up. 3 years, crypto moves pretty fast and people tend to forget quickly. But it seems like in at least the next cycle, it's going to be hard for at least the current crypto community to put any sort of weight behind these, initial offerings of any kind.
Yeah. I think it did serve its purpose for the time when we had it, because it was an evolution of ICOs into something that's per se better, because it's vetted by the exchanges, and these projects no longer need to go out after the ICO and shop for exchanges and pay ridiculous fees to be listed. Plus they also get pretty good marketing from the exchanges that already have a big user base, so they get the word out about the project. So I think the process overall got smoothed out and had its own benefits in a way. But to the point that you were saying, is that it was driven by speculators a lot. Therefore, some of the effects that you see in terms of price, because those projects are early, right? So they're raising funds to build the infrastructure and do all those things that they need to increase the popularity and usage of their token and so on. But that's not going to be right off the bat like that. So that's where the speculators push it up and down, and that's where you have these aggressive sell-offs. But I think it's still was a better version. It's like an evolution of an ICO where it ironed out some things and evolved into something better than what it used to be.
Yeah, at least there was the ability to get out, right?
Yeah,
you were down 50% on an ICO that others knew would never hit an exchange. You didn't have the opportunity to kind of get out. At least this way you could.
All right, we've got the question. Are you guys ready for this?
I'm ready.
I don't think you are. You guys are USA citizens. Do you want to see the system collapse? That was the question that we got from Barry. So I'll let you guys start this one and then move on.
No, I think it's a viable question, right? I mean, there was a lot of chaos this weekend as the coronavirus cases continue to increase. And, you have a lot of major cities in China just basically on lockdown, right? We have some friends and colleagues over there who are pretty significantly worried at kind of what the case is there. And we're seeing more and more pop up throughout the world while, at a time when in the US, you've got a impeachment trial happening and, obviously a re-election kind of versus new election in November. You've got the stock market at all-time highs. You've got, global debt at a all-time high. I mean, you've got all these kind of pieces of context that could, rightly so worry people that we're going to see some sort of, giant recessionary period or overall collapse. I think anybody that thinks that a broad global collapse will be good is very wrong, right? If there's ever a case where the dollar completely collapses, right, that will basically be the collapse of the entire global economy, right? There is no good solution for that to happen. I think there is a lot of good that Bitcoin and crypto can bring in kind of showcasing the issues that exist with the current, basically, QE system that we have in this kind of modern monetary theory system that we have. But if that collapses as a whole, it's going to be very, very bad for everybody.
Yeah, I agree. So on the comment with in terms of the virus that's going on in Asia and China, that actually right now the market is starting to feel a little bit of pricing in the GDP impact that's going to happen on China with such a virus spreading. But also like in US with Feds doing QE and so on. I think it's important to understand that when 2008 happened and we were brink of collapse, and the Fed stepped in and basically bailed out the system to push the can down the road, was necessary, because if we did hit that collapse and we didn't have a plan B, then it would be chaos. So I agree with you. We don't want to see that chaos play out if the dollar fails, if the financial system fails. And a lot of people argue about the bailout that happened, that we should bail out the people that were affected, not the banks. But really, if you think about it, you really needed to preserve the system that was in place to buy time to find fix for the system down the road. And we can see that the Fed is running out of options right now. They're still continuing to do QE, and they can't really do much anymore. But perhaps now with the new technology of crypto, that might be a solution, to fix the issues in the traditional finance. So I think that the whole plan was to really push the can down the road until we find a solution to prop the system up, right? Everybody knows that we're buying time, and then once we do find a solution, then we start unwinding that and have a smoother landing rather than a crash.
Yeah, for sure. I saw a great thread on Twitter from a quant over at Ikigai, which is Travis Kling's fund. That was basically kind of in a short series of tweets breaking down how we've gotten to where we've gotten. I think it was him. We're basically saying, once we moved off of this, gold-backed dollar, we were in a similar position, right? Where there was kind of this chaos and this unknown, and the kind of quote unquote petrodollar came about, right? Where we were basically going to use oil globally to make sure that the dollar was the strongest fiat currency. And we're kind of here again, right? Yeah. Everybody knows that there are these lingering issues with debt and potential issues with inflation and all these things that are happening globally, where if just one thing out of nowhere, like a crazy virus or, some sort of, greed on a debt instrument, right? If anything comes about, there is a chance that it's just kind of the first in a long line of dominoes that hurts the system. And, basically the end to his thread was like, enter Bitcoin, right? If we go full circle and move back to a kind of quote unquote gold-backed fiat currency, why back it by, the soft metal that's not easily transportable? Back it by, the digital version of that, which is fully decentralized, or not, more decentralized, right? Kind of more global, right? It's not obviously controlled by, one entity or one government or anything like that. So
why not a basket of both of those things? Could that exist in real time?
Yeah, and I think that's probably what would happen if we got to that point, right? I mean, if central banks just completely started to denominate everything in Bitcoin, it's pretty scary based on the history of Bitcoin's volatility and price. So yeah, to your point, it would be 0.1% in Bitcoin and quite a bit larger in other bonds or precious metals or commodities or whatever.
And hopefully, as Dimitri has kind of educated us on multiple times, as volume increases, you kind of get less volatility as more people enter the market. So, or at least I hope that I'm saying that right. I can't tell by Dimitri's response there, but anyways, right, yeah. I mean, to quickly answer this, I would need to know like what do you mean by system collapsing, Barry? Is there a 2008 system collapsing where you kind of barely are on the brink of something, but we obviously did have kind of the established system needing to be rebooted or needing to be saved. But if we're talking like system collapse, like complete chaos,
Mad Max style,
I don't have nearly enough food and guns to figure that out. I think a lot of us in crypto, like we all have this like self-sovereignty thing where we don't need the government and all these things. But just speaking for myself, like I depend on the government way more than I think I do, if that makes sense. Like if it comes to a crisis like a national crisis where you really do have to be completely self-sovereign, that's a whole nother issue. So do I want the system collapse? No. I think there are tweaks and things we can get along the way, but if something, God forbid, did happen and we did have that kind of complete collapse, you gotta wonder where everybody would be at a point like that. So
yeah, for sure. Well, in some more positive news here, at least potential positive news, there's a new proposed bill in Congress that would allow capital gains on crypto under $200 to not be taxed. This is done around the kind of fact that if we assume crypto becomes more of this payment method, or at least a way to transact value, it becomes an impossible task for the IRS to ensure that every single transaction in crypto is taxed appropriately. Even if you say it's not the responsibility of the IRS and it's the responsibility of whoever is running those kind of payment networks, whether it's a Square, a Coinbase, or whoever the case may be, still relatively impossible, right? So I think this is a good step forward. It's another example, just like the World Economic Forum, of major, in this case, U.S. institutions understanding that this is not going away and that they need to put things in place that are going to allow it to succeed within the current structure that exists. So it's kind of that typical meme that people talk about, where it's like, first they ignore you, next they hate you or whatever, and finally if they kind of embrace you, they're like, okay, well, we get it, right? We have no way to really track this, so anything under $200 we'll just say is not taxed. My brain, the first thing I thought was how many different crypto funds are going to set up their trading strategies in a way that profits are collected in $200 or less. Creative accounting structures, where now no one, none of those funds are going to have to pay taxes on crypto. So there might be some implications there, but all in all, hopefully a bill gets passed.
Yeah, I mean, what I see from this is that, man, from their standpoint, like, dude, if you made $200 in crypto and you did not claim in taxes, it's not worth pursuing you. No. As a matter of fact, it's not any type of advice, but it could be a higher number. $200, I bet, if it would be 1,000, I don't think they'll really be pursuing that. They would pursue basically funds, like you mentioned, that do big numbers.
I feel like eventually there will be systems set up in place where they will be able to down to the dollar, other than using privacy focused cryptocurrencies like Monero or something like that, like you're talking about, Mike. I feel like down to the cent they'll be able to track automatically what you're spending on these different networks. I just think that's inevitable. It doesn't
Barry's not gonna like that.
Yeah, I mean, it doesn't make any sense why that wouldn't be traceable based on the fact that I can manually trace that now, right? Like if I wanted to see your payments and what you've done and all these things, I could go and do that. I could track each address to each exchange, to each purchase, to each sell. Like, there's going to be a process there in the future where you'll be able to do that automatically. You would basically have to have every participant in the system that allowed that capital gain to happen to be a reporting agency, right? So whenever this whole kind of crypto tax thing was first blooming, you had some crypto exchanges like Coinbase who were basically turning over all of their data on customers and saying, yeah, take it, IRS, if you have somebody who reports no capital gains, but then they, bought Bitcoin at $1,000 and sold it at 10, and it very clearly shows in our records they did make money, easy pickings for the IRS. You had those, but then you also had others like Kraken, I think it was, or maybe Bittrex, who were basically like, you know what, you can't just drop this on us, right? We don't have the infrastructure, we don't have the manpower to be able to retroactively get you what you want, right? And from a privacy standpoint, we think this is not good for our users. So, under that scenario, my point is you would have to have every single kind of participant in that capital gain being a reporting agency, which I think, based on the current size of the IRS, will never be the case, right? I don't think that that is something that, to your point, they're going to want to go after.
Yeah.
Now, their big wins are, giant real estate moguls, right? Who aren't paying their taxes on millions and millions of dollars, versus somebody who made 10 grand or $1,200 on
Google
crypto.
pays zero in taxes. There's bigger issues, come on.
But I see your point. If everything's digital, it definitely becomes easier to automate that process.
I just wonder if they couldn't mandate that certain exchanges have certain addresses. Like, you have to have an address that coincides with this actual system, so that we can just plug that in and see that every single transaction that's ever run through this specific address. I don't know. We're just thinking out loud now. That's obviously.
Yeah. I mean, theoretically you could, right? It's just, do they have the ability to do that, or the resources? But anyway.
So before we move on to Ethereum Classic, let's take note of where Bitcoin is right now. We're at 8,900.
Nice.
So pretty good day. So
3.7. Yep, 3.7%. At least via CoinMarketCap. That's what it says. Yep.
Yeah, the Ukrainian bears are just getting absolutely demolished at the moment.
Hey man, if you watched last Dimitri's desk, man, I told you to buy. So
nice.
Yeah, I'm gonna get you a shirt, man, because when Bitcoin's at 20K, I want people to remember. You're gonna have to wear it every day.
that wasn't me, man.
Man.
All right, so yeah, moving right along to Ethereum Classic, going with these forks. All right, so Grayscale Investments, basically that big fund that we've talked about multiple times on the podcast. They basically said that they're going to continue to fund developers on Ethereum Classic through donations, and they've been doing this for quite some time already. They've already donated 1.1 million, including 338K in 2019, and they're also pretty big holder of ETC, as you mentioned earlier when we were talking about it. And the way they're funding this is actually 1/3 of their management fee that they're using.
Wow.
Yeah, 1/3 of the management fee that they charge, for managing the funds. They use 1/3 of that to invest in ETC, which is basically to pump the bags for them and the people. Their clients that hold the fund. So
this has been creative. A meme for a little while with Barry Silbert at Grayscale. It's kind of like he's holding on to Ethereum Classic, but something's working. I mean, it's pumped like crazy. I think it's back over $10 now, as alts have kind of another similar rally. At least some of them do. So it's something's working, right? He's pumping his bags to some degree, but I just don't. When you look at Ethereum Classic versus regular Ethereum, I mean, the amount of activity and development on Ethereum Classic is a fraction of what it is on ETH.
Mm.
Yeah, it's a tough battle, man. Like, going against how popular ETH is, and you have Ethereum Classic that's struggling, and then you have these guys are trying to stimulate it by having grants. Now, I wonder what's the comparison in terms of these guys are doing the 1.1 million donation to ETC development, but if you look at Ethereum, those numbers are huge. Like devs are not going to be like, man, no, I'm going to go with the Ethereum, man. Those numbers look better.
Yeah, or just even the venture funds that have invested in ETH-based projects versus Ethereum Classic projects, that alone,
It seems like a defibrillator at this point. You're kind of just like trying to get this last bit and see if can we resurrect this network, or can we save it going forward? And we'll see what $1 million can do.
And it kind of flows right into the next topic, which is an interesting one that Vitalik brought up. It was basically an answer to a question on Twitter that he had, where someone brought up the question around whether or not ETC could remerge with ETH via an Ethereum 2.0 shard, right? So essentially, whenever ETH 2.0 comes out, they're going to have the proof of work Ethereum chain on a shard, within the ETH 2.0 blockchain, for data purposes and history purposes. And someone was, hey, can we do the same thing for Ethereum Classic and kind of merge it back and merge communities back? And Vitalik, without going obviously into kind of the deep technicals of it, was that, his answer was yes, this could happen. From a political standpoint, it'd be quite a bit harder for that to happen, as you have really two of the most, kind of divisive communities in crypto. Trying to get all of those community members to agree that this is a good thing I would think be relatively impossible, but was an interesting point and an interesting answer from Vitalik regardless.
So take me through the merger one more time. So this is Ethereum Classic going, what I'm not connecting the dots here.
So, you could basically merge Ethereum Classic back into ETH by running it within an ETH 2.0 shard. So, I don't know the exact technicals on that, but it would allow the blockchains to kind of like relatively merge back together.
Or at least be able to talk to one another.
Yeah, there'd be a ton of benefits to it. yeah, so interesting point there.
Gotcha. Awesome. Yeah. Well, Dima, did you have something there before I move on?
No, go ahead.
All right, sounds good. Well, so I've got PoolTogether. This is a DeFi application on Ethereum, and basically what it is kind of a lottery system for DAI. So, as most of you know, DAI is obviously one of the biggest, DeFi assets on Ethereum. You can kind of, I believe, trade in, or is it? Take me through the process of DAI, Mike. Is it, do you trade in or do you stake your Ethereum for DAI? I believe you stake Ethereum, you get DAI.
Ethereum's the original collateral, right? Now it's multi-collateral, so any ERC20 token will work
Gotcha.
as
So basically how this PoolTogether lottery system works, which is always good to see applications or dApps that have good use cases, or at least do something interesting. This is essentially like a gamification for DeFi. You have the DAI that you get from staking Ethereum, and you can take that DAI and do what you have with it. Some people are using that loan to then purchase other assets or things like that. Well, basically you can stake DAI within PoolTogether. An interest that is earned from these all of this DAI together is then paid out to a certain individual that wins this lottery system. So on a running clock, let's say 7 days, so many people put in DAI. You have 1,000 or 10,000 DAI. That's 10,000. That's 1,000 or 10,000 tickets. So let's just go with hypothetical of 10,000 tickets. One ticket will win the interest accumulated from all this DAI, and it'll go to that one person via smart contract. So, I mean, you lose out on the interest that you would receive from putting that DAI to work in some other way. I know that DAI probably has some type of interest rate on different lending platforms, but you have the opportunity to stake your DAI and maybe possibly be a winner of this lottery system. And over a certain amount, and I believe this is a Mike Dudas from the block, it says PoolTogether continues to see rapid growth, with the most recent DAI-based pool amassing over 195,000 from 1,187 unique players. So, right off the bat, they're pretty new dApp and they've seen success. So I thought it was important to add that in there. The one thing, I believe there is some type of custodial risk in looking into this. There's a multi-sig that happens with this contract, and it's two of the team members. So there is a custodial risk there. It's not fully decentralized, as a lot of applications that we talk about here are. When you look at DeFi, there's definitely a spectrum of how decentralized it is. So there is a custodial risk. So when you put, if you do use PoolTogether, just be wary that there is a custodial risk there. I don't believe it's insured or anything like that. So.
Yeah, definitely. I would highly doubt that. Yeah, for sure. But hey, everybody loves to play the lotto.
Yeah, of course.
If that gets, bigger and bigger and bigger, the chances to win every week will go from, it looks like, I think you can win up to almost $1,400 a week right now. That could get pretty significant. You buying your lotto tickets. So yeah, good to see those guys continue to grow. I mean, it's a DeFi app. I mean, it's basically just lottery, but it shows you like some of the cooler aspects of DeFi on ETH.
It's something that works, right? It's like it has an actual use case. Like it has a product market fit. I feel like when a lot of dApps you're out there, you're like, why the hell would anyone use this? And then this kind of gamifies the staking system. When you're earning interest on DAI, that's then redispersed to one single user. Cool.
Yeah, they can play a role in retaining those people to hold the position rather than cash out. And because if they can participate in something like this, that's essentially a retention of the capital instead of cashing out.
I actually wanted to ask you guys this question, because I like taking this gamified model and maybe attributing it to a node on a staking network that pays out to voters. Could a node use this model to attract retail investors to vote for their node?
That's really interesting. Yeah, absolutely. I think so.
So somebody like let's even just take the IOST network. You have retail investors that stake to a node. They get the rewards that they would normally get, But the node could then say, we'll take 1% of everything we get and we'll give it to one single user. You obviously have to like sign up. You couldn't do it by address because that could be like a complete nightmare. But if you sign up along with staking to the actual node, you have a chance to enter this and you get 1% of the reward per quarter, something like that.
Yeah, I mean, probably after hearing this, by the end of the week, there will be a new project based on ETH, like some hybrid middleware project who's raised $4 million and ran for a protocol for every node to be able to offer a lottery system for their voters. But yeah, that'd be super cool. I mean, you could even have like a kind of like a scrolling number where if you're, like you said on IEOs team, maybe you're earning 15%. Well, I want to take 7% of that and put it towards this lottery that happens every month and keep the 8% interest. It's it could be pretty cool. Yeah.
Nice.
Yeah, definitely interesting idea. We should censor this part, for the recorded.
We're gonna patent it.
Yeah. All right, cool. Moving right along with MakerDAO. So interesting article came out saying that one wallet owns 27% of Ether. That's behind basically the size stablecoin. It's just interesting in the article overall where they talk about how much has been already locked up in this DeFi application, MakerDAO, and this one website, DeFi Pulse, that shows it. Basically, you have $793.1 million that has been locked in. It's 3.2 million ETH that has been locked in. And now that they, you can use. They offer multi-collateral option now that's just gonna continue to rise with other assets besides just ETH. But the article basically came out saying that 27% of one single wallet that basically is supplying these collateralized debt positions, and for me when I read this 27%, so we don't really know the person behind it or the entity behind that,
right.
And which, when you have such high concentration in one single wallet or entity, that can be exposed to the risk of volatility in the market. So we're not sure what is the risk management for that entity. Do they have certain insurance funds? Are they hedge? Are they just using what is the purpose of it? So if you have a high concentration of these collateralized debt positions, CDPs, that is so focused on a single wallet, then in a time when the volatility picks up and maybe even if the margins increase, for these loans, then that's going to put a heavy risk on somebody who holds a big percentage of these loans. Right. So it's just I feel like it's better when you spread around the loans when it's not heavily concentrated on a single big double-digit number. Ideally, you want to spread it because that offers you more risk diversification in terms of if volatility kicks in, if margins increase, then you have some that fall off, some that don't. But if you have a 27% that's in a single wallet that's holding it, then that can offer you a risk.
A lot of risk for sure, and couple just points to clarify here, right? Psi, I guess, is the new term that they're using for the single collateral DAI. It seems like kind of various entities are giving it various names, but Psi is, the single collateralized, and then DAI now represents the multi collateralized DAI. So we've seen like MCD be used, but I think what Maker is going with is Psi versus DAI, single versus multi-collateral. But I saw the headline to this article, and then reading it, it was kind of like, the result they came to, or at least the conclusion they came to, was like, well, we really don't know if this is from a smart contract, or we don't know if this is multiple entities. We don't know how many people are behind this, but it's kind of scary in general. So I don't know. I mean, it to me, it kind of came off as a little more clickbaity than normal, especially because it's in the Psi versus the DAI. So maybe it's just, left over from the conversion. It's some smart contract doing something behind the scenes. I don't know, but that was the impression that I got from it.
Yeah.
quick, give me your content and media rankings based on this. I feel like what you just said is attributed to Cointelegraph a little bit more than a couple other maybe content distributors. So give me a quick ranking. 1, 2, 3.
I probably still put CoinDesk number 1.
Okay.
Then yeah, I mean, really, CoinDesk is the only one that I truly trust.
Okay.
Cointelegraph has had its issues, but over time, I think it's okay. And the block just drives me nuts.
The block.
You don't like the block?
I mean, they're fine, right? I think they do some good things in trying to kind of push crypto journalism or crypto news forward. But like one of these articles, it was the PoolTogether article, right? I was like, oh, this is super interesting. Let me go read it. Well,
it was under Genesis.
You have to pay $85 a month to read certain articles from the block.
What is the Wall Street Journal?
Yeah, Wall Street Journal for like your lifetime. I think you could get for $85 a month. You know, like it's just things like that, or some of the ways they act on Twitter drive me crazy.
It's a hard knock life in crypto, man. You gotta make a buck here in crypto. But
oof.
Yeah, man, I enjoy Decrypt. I like the way Decrypt is handling themselves, and I believe most of their articles are free to watch. But
Bitcoinist is a great one.
Yeah,
that's another good one.
Yeah.
I like news aggregates platforms, so I just get a bunch of different ones. They filter through some of them that are not are not supposedly good or what the clickbaity and stuff. So I like those because they filter it for me. Some like CoinS is pretty good. Masari has been pretty good with that. Good. Masari is really good. So yeah, that's my answer.
Okay, sounds good. Well, you guys in the chat, we appreciate you showing up here. I know you guys are filling in as the episode goes along, and we're sitting almost at an hour and 26 minutes here. So we'll kind of lightning through the rest of this episode, but we appreciate you guys sticking around. And when we have those discussions or we have those rankings, we'd love to hear what you guys have to say. But not much EOS news this week as we move into EOS. EOS Radio is hosted by Ash Oro and Zane Whitener, and they're two I would say close colleagues of mine or close friends within the crypto space. We've never met in person, but they've always been very generous with their time. They talk about Layer 1 on their podcast, EOS Radio. They have been around for about a year, and it's live shows every week. Really good, in depth. They've got the guys from Liquid Apps on. They've had the guys from Telos on. They've had the guys from pretty much everyone in the EOS ecosystem that is worthwhile having on a show. They've had on EOS Radio, and apparently they're hosting their last show this week on Wednesday. I believe it's someday at midday. So it's sad to see that content piece go away. I think you made the point that there's a ton of EOS people in the industry right now that as EOS's price has gone down, they've kind of like left, and then right before the pop here, it seems like they're leaving, and it doesn't make much sense. But I know for a fact that Ash is working on something. I'm not gonna say it on this episode or at all until he announces it. But Ash has got a pretty cool job here that he'll announce shortly. But
nice, yeah, we had him on the podcast. Was he our first Layer 1 guest?
First Layer 1 guest.
He was the first one, yeah. So a lot of interesting thoughts from him. He's got a diverse background. Go check that out. If you really are still interested in kind of the ongoing EOS governance decision, I feel like we've kind of beaten that horse over and over again. But shout out to those guys. We appreciate the love. Maybe in the future they'll pop back on.
For sure. So I've got Harmony. This is pretty much like the lightning round that we'll go through. Any projects that we don't cover in that space where we kind of commonly cover those networks. So BNB, EOS, Tezos, Ethereum. That'll be in the latter half of the episode. So we've got Harmony right now kicking off their migration from the Ethereum and Binance chain. So obviously they had those tokens for their IEO on the Binance and Ethereum chains, and due to their mainnet going live, they're looking to obviously port those tokens over and have just mainnet tokens. An interesting point. And the article will be here. If you do hold any Harmony or one token is what it's called, you'll need to transfer them to an exchange for the actual swap to happen. So I know like a lot of networks, you didn't have to transfer from an exchange. You could do it manually, but for this, you will have to, transfer your tokens to a supported exchange. I'm assuming that's Binance and possibly some others. But take a look if you do have one tokens, and good luck to Harmony as, they make that migration to their mainnet token.
Yeah, for sure. They've, had some good growth thus far. We've been following them a little bit. So congrats on that launch.
Yeah, absolutely. So another company that had quite a bit of growth, Celsius, making a headline here, basically saying that they can introduce compounding interest, which is huge, right? So they're saying that starting February 1st, you can earn interest on your crypto, and that's basically their way to retain clients. So they hold their position in earning interest over a long term rather than flip flopping, getting in and out, and so on. Gives more stability and gives more incentives for those people to stay and earn interest with Celsius. And these guys have been doing really good. Cointelegraph was reporting that they had 2.2 billion in coin loans that they did in August 2019. But then by November of that same year, they got to 4.25 billion.
Wow.
So these guys are growing like fast, So, and we know them, we've worked with them. Obviously, they're good guys. I met Mashinsky a couple times, spoke to him, the founder. So definitely, big stuff is happening for Celsius. Congrats.
Yeah, for sure. That compounding's big. I believe BlockFi, who's obviously their main competitor, they started a bit later. They compound, but it's interesting marketing timing, because at the time that Celsius did this big AMA where they announced this compounding, BlockFi sent out an email that was basically like, so we got to lower rates. Their Bitcoin rate went from like 6.2 to 5.2.
Oh, wow.
Yeah, so it's going to be this kind of ongoing battle for really crypto focused, or at least those borrowing and lending companies that are really within the crypto ecosystem, I would say. It's going to be an ongoing kind of, Ford versus Chevy battle as the years continue.
Which is good. It offers competition, which pushes these competitors to, be aggressive in terms of product design and giving more to the people, so the people can be, making the decision which company, they want to go with. But I think they both have kind of their own segments where they succeed in, and they, continue to succeed in. Like BlockFi has their own segment where they target market specific clients, and Celsius, has their own on the other side as well. So
I hope they're doing their due diligence with being able to handle like a mass migration. Like, let's say Celsius has this lending percentage that they go with, or these reserves, and then BlockFi just blows it out of the water. They have most of their users poured over to BlockFi. I hope they have what do you even do in that scenario when you don't have enough to pay out those reserves? You just over time, you're like, hey, you're going to have to wait another week.
Yeah, I mean, I don't know what the scenario would be where they can't pay out the reserves.
Yeah.
They would have to lose the money that's being lent in some form or fashion. But
also given the margins that are there, it's I think it's pretty big room for them to sustain.
Okay.
So the amount of money you have to lock in to get a loan is 3 times as much, basically right now.
Yeah, on the loan side, right?
Yeah. Okay.
Right.
Yeah, that makes sense.
The compounding's obviously on the lending.
Yeah.
So I mean, maybe if you get into sketchy territory if you make the bad decisions of, let's say you offer 20% on stable coins, right? And you get to a point where the internal structure can't pay that. So you start to take some of the principal and pay that out in lending. Then, you run into like a Tether scenario where you're not fully backed. But there's always a risk, right? There's always that counterparty risk. It comes down to trust with a Celsius or a BlockFi there, because at the end of the day, not your keys, not your crypto. So something to always keep in mind as that continues. But yeah, 2 final points here. Some looks like a smaller network, and then also kind of like a decently large network. So,
yo, can you mess with your mic? I don't know. Maybe you have something coming out. It looks like it's kind of like muffled.
Yeah, I'm not sure. I'll scoot a little closer there. Is that better?
Yeah, a little bit.
A little
Yeah,
better.
you're fine.
Okay.
You want to use my mic?
No,
No.
it's good.
So Arweave is a project that launched some, pretty significant fundraiser. They've launched a DAO. So this is going to be a community run DAO. Masar is reporting on this. We haven't seen a lot of news on Arweave since this announcement, but basically they're going to allocate 25,000 DAI from the Arweave core team to help fund open source developer teams. I included this to talk about because it was a little different, but as I was getting through this, I was kind of like, well, this is a joke, right? Like, what does 25,000 DAI do for any sort of serious DAO to exist? I mean, obviously, a DAO, right? You want it to be decentralized. You don't want to be the only one putting in money. So maybe they'll have other people contributing, but obviously you're going to need a significant amount for that to actually make any sort of kind of impact. 25,000 doesn't do much, doesn't pay people long to develop on your network. But news from Arweave regardless. The final point here is from Cardano. So Cardano, really the co-founder and CEO, Charles Hoskinson, is saying that they anticipate a hard fork in mid-February. This is going to essentially allow, with pretty high certainty, that the Aurora Boreas Byzantine fault-tolerant consensus protocol to be implemented, or OBFT for short. To me, and let me know what you guys think, but to me, Cardano is one of those who, they kind of constantly come out with white papers and ideas and kind of theoretical, kind of goals that they're going to attack, but really haven't done a good job of actually going out and executing much. They did, as it was reported by Cointelegraph a little bit ago, they did go out and partner with the government of Uzbekistan to form what they call a blockchain task force to develop regulations for security token offerings and exchanges. So, doesn't really seem to have anything to do with their public blockchain, but there's some executing happening there. But if you're a big fan of Cardano, keep that in mind. Hard fork coming mid-February, it seems.
Mike, do you know who Charles Hoskinson is?
I do. Yes, I do.
Or is it Dan Larimer? I can't tell the difference. But
we had a funny story there. You remember that?
Yeah. But without going too far into it, because we are an hour and a half in, part of this article says also that when they did launch that test network, they had about 5 billion ADA, worth about 195 million, it says, staked on the network. I don't know the percentage there, and I don't know, that could be a large portion just from the team wallets and addresses. But that's always a good indicator, right? Like, you want to see good voter activity, good staker activity within the network. To me, Charles, whenever I've seen Charles in interviews, he comes off really critical of a lot of projects, and it's super easy. I always go back to that one poem about the man in the arena. It's really super easy to be the person on the outside of the arena, kind of judging everyone that's doing what they're doing, and in a way, this is kind of a mind. I don't want to say the word, but it's kind of what's the word I'm looking for? I'm actually doing what I'm asking him not to do. So it's kind of ironic that I'm actually, giving a lot of heat to Charles. But, to be honest, this is going to be something that's going to be ongoing. I don't really see Cardano going anywhere in the near future, and I think they like it that way, honestly. I don't know how they support their system other than, how much did they raise in ICO? Did Cardano even go through ICO?
I'm not sure. Yeah, I'm sure they've got a pretty significant war chest, and they have a pretty large social following. There's a lot of people that are interested in Cardano. You see it pop up on Twitter and elsewhere. So it's another one of those projects. I mean, right? It's kind of the case with most of crypto. You have a lot of these layer one protocols who just haven't really been able to execute that much. Cardano is certainly not the only example.
But they're not even trying. That's the difference, right? Like, at least other people are trying and failing spectacularly. But
I was gonna say that recently on Dimitri's desk, somebody asked me to look at the chart, the ADA and USD. So I did look at that, and I mean, Cardano is up, since the middle of January, it's up 50%, so maybe it's that Uzbekistan pump.
Yeah. That Bitcoin pump.
Yeah.
So before we end here, and this was a long and great episode as per usual. We did have some comments. Barry wanted us to touch on one specific comment that he made. Let's look back. Everything in crypto is going soft, bending over to the will of the government. Fact each month. Projects are soft selling everyone on a bit of KYC, a bit of reporting. It's like being half pregnant. So I think what he's saying is that there's a lot of projects kind of forcing users to do KYC and then benefiting off that somehow. Is that what he's saying?
Yeah, I don't know.
I'm looking.
I mean, the KYC, the period of a world where KYC doesn't exist is ending very quickly, kind of with the FAFSA task force and these things. It gets worrisome if you can track everything everybody does, but having some balance, I think, is good.
Yeah, it might have to do with just the actual physical KYC. He might be talking about the fact that it's crypto and that more projects are getting into this KYC process. So yeah, man, let's hit on that next week. Obviously, if like something we're doing, the news comes up, and you can drop us a link there, or if you want to talk about it with us in the Telegram. Otherwise, we kind of moved past it too far to kind of rehash that conversation. So we did have. Okay, so he says basically yes, what Mike is saying. So we did have one last comment. What's the speculation on Voice? I'm surprised we haven't heard much from Block 1 this close to the release of beta. Yeah, I mean, Block 1 probably is going to come out with news here shortly. Obviously, it's going to be a closed beta, so I don't know exactly what type of people that they're letting in. I don't know if it's completely open to everyone. I doubt it. So we'll see what happens. I think Dimitri kind of touched on this in Dimitri's desk, although he doesn't talk about fundamentals that often. But the price is probably going to see some type of movement as Voice, goes up to launch. So who knows, man? I think, yeah.
We talked a little bit about the potential bad news for it if it doesn't, build on EOS, but I think a lot of that was kind of FUD and clickbaity as well. So, yeah, I mean, we've got, about 3 weeks until Voice, so a little bit of time here. Yeah. I wouldn't hold your breath on some sort of Voice EOS pump, but EOS seems to be pumping regardless, just based on Bitcoin's growth. Right. It's been pretty correlated there this year so far.
It'll be interesting to see who they let in the beta. I think like Vitalik was, I think he actually like signed up for the beta. It'll be interesting to see how like the users that they let in, are they going to be pro EOS, right? Because then you kind of have a bias in how they're reporting it on platforms like Twitter. If you have a bunch of people that are pro EOS being like, this is awesome, right? Like maybe you see behind closed doors a little bit, but not too much. And then you get a Voice pump. I don't know. But
is there an announcement for the official Voice launch?
No.
Is there no. Okay.
No. So they're gonna quietly release Voice on a private network, and it's not gonna be like on the EOS blockchain, at least to start. So we'll see.
Gotcha.
Yep.
Yeah, it'll be interesting to see how if they get all these OG like crypto people to start using the platform for beta, and they basically design it for like crypto users, and then because it's not going to be user friendly for the mass adoption for those people that are not in crypto, so yeah. That could be a mistake too.
For sure. If I get into the beta launch, I don't know if you actually got notified by now, but I'm pretty sure you would have been notified if you got in the public or the closed beta. So we'll see.
We will see. Well, thanks for listening, everybody. Thanks for showing up on YouTube Live. We do this every Monday. Make sure to stop by next week. We've got a couple interviews this week. We've got Lolly tomorrow that we're recording, so that should hit, I guess, Wednesday. And then you guys have got an interview with Polkadot, which should hit, sometime Friday or this weekend. So stay tuned there.
Yeah, absolutely. Yep. And you were super excited about that Richard Burton interview too. So can't wait to get to that one.
Yeah, for sure, man. That's coming up. We got some good guests ongoing. Take a listen to Snowball. That was one of our most recent guests. And yeah, Dimitri's desk tomorrow. Lots of content coming for you guys. But until then,